Waiting for the sports channel, Gab.
Alrighty, welcome back to Weenie Trades. We had another fun day here at Weenie Trades Live. It was a super crazy day. Yet again, GameStop started popping off yet again. Massive short squeeze. Congratulations to all you GameStop bulls. Just be sure you manage your risk. I want to constantly preach that this isn't normal and this can and may end very badly, but the trade is less risky the more that you're up on it. So in this video today, I'm going to cover how it isn't just retail that's buying GameStop. So retail is like if you have a regular broker, you know, Thinkorswim, Robinhood, you name it. That's retail. But the big money, institutions and stuff like that, I think they're starting to smell some blood. They know that there's a lot of institutions that are short GameStop and they have to cover at some point. And I think that they're flooding into this, looking just for some quick profits, just like the retail crew is. And it's creating this massive euphoria and massive huge prices on stocks like GameStop. This isn't normal. And so in this video, I'm going to also be talking about how the risk to reward on shorting stocks is not very favorable. The most you can make is 100%, but if you short a stock and it goes up infinitely and you didn't use a stop loss or you didn't have an idea in mind of where you're going to get out, you can lose infinity amounts limit to the losses that you can. And we're also going to kind of talk about euphoria and how once the euphoria is at its maximum peak, that's usually when every single short seller has covered and the stock is likely to drop. GameStop yet again is following the technicals over the fundamentals. GameStop had the chance to sell off today. We were making lower highs and we were making lower lows, but the bears weren't getting much follow through. People kept on buying up the stock. And eventually GameStop just started squeezing yet again, and we started getting halted even on the upside. Then we started to halt on the way to the downside, but the bulls kept holding higher lows every single time. Here's our higher low, higher low, higher low. We're making higher lows constantly as we're going through GameStop. So that means that the bulls are still keeping full control. And as long as you kept a loose stop loss, you were able to ride GameStop the entire way. Well, in the after hours, I said at the end of the day, hey, we're closing bullishly. I have a share of GameStop. That's just because we got the Weenie Trades people saying, Weenie, you got to join history in this. I only bought one share because that's the most I'm willing to lose. If GameStop goes to zero overnight, the most I can lose is $145. If I shorted GameStop at $145 and GameStop goes all the way up to $500 a share, I can lose quite a bit more than that. So GameStop, let's talk a little bit about risk to reward. If you buy 100 shares of GameStop at $2.57 and a GameStop goes bankrupt and goes to zero, the most you can lose is $257. If you short 100 shares of GameStop, meaning you sell 100 shares of GameStop at $2.57 and you don't use a stop loss, boom, you would be down so much money. You would be negative $2,200. It's insane. You'd be negative like $24,000. And if you bought 100 shares of GameStop at $2.57, you'd be up. That value would be worth $24,800. So the risk to reward is always to go long in the market. Shorting never really works out. That's why I always usually preach put spreads, put debit spreads, bear call credit spreads, covered calls, stuff like that if you really want to quote unquote short a stock. So just be careful on GameStop. Once this euphoria starts to end, GameStop can drop as much as 40% really fast. And there's going to be some deer in the headlights and they're not going to like it. The next stock that I want to cover today is BlackBerry. And BlackBerry on the daily chart had a good inside day, meaning today's day was inside the range of yesterday's high and low, meaning that's actually a win for the bulls. If you form an inside day, that usually means you had some consolidation. If we look at the hourly chart, we can see our low points, we can see our high points. And so this is definitely a win for the bulls. We'll see if the Wall Street Bets people are going to squeeze BlackBerry. Again, riding BlackBerry with small size. How would you feel if BlackBerry gapped down 30% just as it gapped up, 30%? So just be sure to manage your risk. I'm watching to see if BlackBerry can hold $20 a share tomorrow, and then we can see if we can get the squeeze up. I'm looking for something like 25, maybe as high as 26 on BlackBerry. If the volume and momentum is really there, we could see a squeeze all the way up to potentially like 30 or some really much higher upper targets. 24 is our next level, and we got 29. And then we've got 32. So keep an eye out for BlackBerry. And then lastly, we're also going to keep an eye out on AMC. It seems like the short sellers are getting really scared and they're starting to cover a lot of their short positions. AMC is squeezing up after hours over 46%. So we talked about how we were bullish AMC, but it just needed to hold yesterday's range. I said the stop would be about 420. AMC never came underneath 420. Therefore, if you were able to tolerate that risk, that 20% risk, you'd still be riding AMC. If not, that's fine. These stocks are very volatile and a lot of people are getting burned. A lot of people are making a lot of money. I'd rather not get burned than make a lot of money, but that's for a risk adverse person. It's a kind of weird being a trader and being a risk adverse person, but that's how we stay here for the long run. So hopefully you learned something new. Watch us at Weenie Trades Live, and you can see me break down these amazing stocks. They're really insane, to be honest. And so be sure to hit the like button if you learned something new on how the risk to reward on shorting a stock is not very good. And once a market starts to see extreme euphoria, that's when the short sellers might cover. I don't know if this is extreme euphoria just yet on GameStop, but we'll be on the lookout for it, and that we'll see a massive capitulation when the last short seller has covered. We see a fat green candle, and we're halted up, and then we start to see the backside of the move. That's the time where it may be the real drop. Because each of these times on these drops, we've dropped massively. Every single time GameStop has dropped, it's bailed out everybody that has not stopped out. But one of these times, GameStop's going to drop these 14, 15%, and it's going to continue to drop. It's going to continue to drop. Sure, GameStop may go to 1,000 like some of the to the moon people. I'm not in that camp, but anything is possible. As I've seen, I've been definitely proven wrong before, but that's okay. It doesn't mean I'm going to take a short position if I'm not long. So hopefully you learned something new. The risk to reward of going short versus not taking the trade versus taking the trade, but with small size. Alrighty, thanks for tuning in. See ya.